What is going on, everybody? Dave here, and welcome back to Is the Bottom In? Today, we're tackling a stock that's seen some serious turbulence lately, CarMax, ticker symbol KMX. It just gapped down, folks, and that's got everyone asking, is the bottom in for KMX, or is there more pain ahead? We're about to find out. All right, let's dive into the current market narrative surrounding KMX. The big story here, and it's not unique to CarMax, is the used car market struggling under the weight of high interest rates and broader consumer affordability concerns. When borrowing money for a big purchase like a car gets more expensive, people naturally pull back. This has created a tough selling environment, leading many to be pretty bearish on the sector as a whole. Now, before we get too deep, let's quickly reintroduce CarMax Inc. They are, as you might guess, a giant in the used vehicle retail space across the US. They offer everything from domestic to luxury cars, even hybrids and EVs, and they also run their own financing arm, CarMax Auto Finance, or CAF. Here's the kicker. Despite the market noise, KMX's management has recently indicated operational strength, focusing on unit volume growth and robust gross profit per unit in their latest quarter. They see themselves continuing to execute effectively, growing sales and market share, which gives us an interesting setup for our analysis. So we've got a classic clash here, right? The general market narrative is tough times for used cars, but CarMax's management is saying, we're executing, we're growing. How do we reconcile that? We do it with our scenario analysis, looking at the possibilities. First up, let's talk about our base case, which we're giving a 40% probability. This scenario assumes KMX keeps executing on its strategy, growing sales, market share, expanding gross profit, leveraging SG&A, just like management says. Even with those macroeconomic headwinds like high rates, KMX's omni-channel strength and focus on unit volume allow it to perform relatively well. CAF manages its credit prudently, avoiding significant deterioration. We started with their TTM net income of $550.84 million, estimated about 131.69 million shares outstanding, which gave us a TTM EPS of $4.18. Projecting a modest 5% growth to $4.39 for forward EPS and applying a target PE of 16x, we arrive at a fair value of $70.24. We're giving it a decent probability because fundamentals matter, but the prevailing bearish technicals definitely temper that. Next, our bull case, which we're assigning a much lower 15% probability. This is where things get rosy. Interest rates drop significantly, consumer demand for used cars explodes, KMX gains market share faster than expected, and GPU expands due to strong pricing. CAF benefits from a healthier credit environment, leading to lower losses. Starting with our TTM EPS of $4.18, we project a substantial 15% growth to $4.81 for forward EPS. Applying a higher PE multiple of 18x, we get a fair value of $86.58. Now, why such a low probability, Dave? Because frankly, the current technicals, showing a strong downtrend and the stock gapping down, would require an absolutely massive, unexpected positive catalyst to overcome that kind of bearish momentum. And finally, the bear case, which we're giving the highest probability at 45%. This scenario is heavily influenced by those technicals. It assumes macroeconomic headwinds intensify, rates stay high or even climb, crushing consumer spending and affordability. KMX's growth initiatives get stifled, GPU comes under pressure, and credit losses within CAF rise significantly, hurting profitability. We started with our TTM EPS of $4.18, projected a 10% decline to $3.76 for forward EPS, reflecting that tough environment and underperformance. Applying a lower PE multiple of 12x, we get a fair value of $45.12. We're giving this the highest probability because the technical analysis clearly indicates a strong downtrend and the stock recently gapping down, with major supports identified at $40 and then $25. Our calculated fair value for this bear case aligns very closely with that first major support level, suggesting this is a very real possibility given the current market and chart setup. All right, let's pull up the chart for KMX. Here's what I'm seeing based on our technical analysis. The KMX chart is in a strong downtrend and it recently gapped down. The next major support level to watch is $40. If that $40 level breaks, the stock can definitely drop to the next major support, which is all the way down at $25. So, not a pretty picture technically right now. So, is the bottom in for KMX? Based on our deep dive, honestly, my verdict is not yet, folks. While the base case offers a reasonable fair value around $70, the strong bearish technicals, the high probability we've assigned to our bear case at $45, and the critical support levels looming mean we could see further downside. The market narrative and the chart are aligning against KMX for now, suggesting it's not out of the woods. Given our analysis, potential levels of interest would be around our bear case fair value of $45.12, and definitely watch that technical support at $40. If that breaks, then the $25 level becomes a very real consideration for a potential entry. Patience is key here, folks. All right, that's our take on KMX. If you found this analysis helpful, do me a favor. Smash that like button, subscribe to the channel if you haven't already, and hit the notification bell so you don't miss our next episode. And let me know in the comments below, do you think the bottom is in for KMX? Now for the important stuff. I am not a financial advisor. This is not financial advice. All information presented here is for entertainment and educational purposes only. Investing in the stock market involves risk, and you could lose money. Always do your own research and consult with a qualified financial professional before making any investment decisions. Seriously, do your homework.